Hi all, welcome to today's live market opening report from Zebu school. So as we expected yesterday, we have seen a good gap up opening. Actually many people are following some kind of global things and moreover SGX. Actually we have a very simple rule to identify how the next day opening could be. So whenever based on the last 20 days videos if you would have watched, so my simple trick is whenever market closing near the day's high, obviously if there is no negative news flow, then the next day itself market will open gap up to with a positive bias. So please note down this. Again, whenever market closes near the day's low, that means you can assume that closing towards the day is at the end of the day's low. So then next day what you can expect is negative to flat basis you can always have a vision. So instead of following SGX, instead of looking at the global market, use this simple trick. So it will be much useful, because yesterday we assumed that market is going to open on a flat note, irrespective of if you look at the global cues, the Dow was down. Even if you look at the Asian markets, it was down. But against all odds, our Indian market has opened slightly gap up. This is easy to predict also. So this is the simplest trick I am just using. So if you wanted to see in terms of data point of view, so you all know that today is a monthly expiry data. So that means whatever is going to happen based on the data is an validity for only today. So from the data point of view, we have seen from yesterday the data are slightly bullish. That means the puts are written slightly higher than the calls. That means there is an price wise there is a momentum in the data wise also momentum is there. When you see wanted to have a vision for the next few hours, because today is an expiry day, so we all know that volatility will be the part of the expiry day. So what we can do is try to have a price kind of momentum. So in terms of if you wanted to discuss what is the price momentum right now, if you look at the price momentum, how do you gauge price momentum? You take a low time frame chart like 15 minutes or even 10 minutes, then try to identify using a channel, or better to use an last 20 candles higher. So whenever market is inching always towards that higher side or lower side, so you can use that. So Donchain channel is the simplest indicator where you can using that you can gauge the price momentum. So what you can do is use the Donchain channel, use the 10 minutes, and then use the setting as last 20. That means what? Whenever the price as breaching the last 20 candles low or high, so it will have a line, so you can have a price momentum. So if you look at the price momentum, for me it's again on the bullish momentum. So data if you look at, so that is also slightly bullish. Maybe over the period of the day, the next 4 hours, we can see if there is any unwinding in the puts, or if there is any more written on the calls, then we can think about the market can correct. So structurally how it is there. So long term you have seen the price is actually on a downtrend. Now it has retraced back to the 61.8 retracement. If you look at the daily chart, so you can identify that out of whatever I am saying, you can realize it. So market has fallen from here and it is trying to retrace, and it is now residing at the around the place of 61.8. So though the lower time frame is projecting a slight momentum, but to be frank, I am not a contra trader, but I am always a higher time frame trader. So from here, if you look at risk reward point of view, I may not be taking any longs here. I am just waiting for the longs to hit the target, and at that time if there is a risk and reward is favorable to me, it is not only the risk and reward, moreover if I have a logic to have a trade there, so that means what I am saying around 61.8% there might be a short term high. So it is only the expectation, but what I need to do is during this logics, wherever I can take with a smaller risk, it is not only the smaller risk, it is the with the logic, if I can take a smaller risk, then obviously I am going to get more money out of it. That is generally my trade plan. So if you see the institutional point of view, yesterday after so long time, actually I don't remember when I seen both the people are buying. So yesterday if you look at the data, like both the FIs were net buyers and even the DI were net buyers. So both were selling, like both were buying. FI were buying for 1,300 crores and DI was buying for 1,200 crores. It could be because we are at the end of the financial year. So sometimes what will happen, people will be used to buy so that the NAV of the whatever the funds they are holding, so that might be getting an higher relevance when you compare to the yearly performance. We don't know what is the exact scenario, but looking at the data point of view, so institutional point of view also, it is slightly bullish. So we have seen last 1 year, last 1 month, FII were in a very selling spree. So almost more than 65 to 70 crores they sold over the last 1 month, if you look at the data of institutional figures. So now that has become sorted out. And one more thing which we need to start out for a bull's point of view is this Russian-Ukraine war. So there is some kind of longevity to the war, but because of the longevity, we are expecting this will end soon, but this is not happening in the real scenario. It is getting dragged. So what you can sense is, if the ceasefire get announced officially and Russia stops the war, then obviously this will be a good sign for bulls. But we need to see that it has to happen, and then market will bounce from here. So don't play against the news. Actually, for the last 15 days, what we are saying people to do not take huge positions. Actually, I am saying play only intraday. So don't carry much of the positions. If you are carrying, please ensure that your risk is hedged properly, because any day whatever can happen, and that too you during this environment. Though today VIX is down actually. If last 2 days, if you have seen, the VIX is down, so almost near 20. That means the volatility is subsiding, but there is a high chance that some kind of news may trigger. If the news is good, obviously it is good for economy and even good for the bulls. But if something is not expected is happening, then obviously the volatility will kick in. So please ensure that whatever you are doing, please make sure that you are very well versed with whatever the risk you are taking. And coming to the what we can do right now. So if you ask me for the today's view, yes, till afternoon I am expecting slight bullishness to carry on, and then around 1 o'clock when the Europe market opens, obviously yesterday Europe were a little down, so it has to open little positive. So at that time there might be a surge in the bullishness. So what I am trying to do is, today I am not taking any views, because this is an expiry day. I don't trade much in expiry day. I am a positional trader, and that too I am trading with huge money. I don't trade in future. Generally what I do is, I take a view, I take a probability, and make sure that I make my money within my probability. And moreover, my risk and reward is always ensuring that if this risk is taken, this reward can be achievable to me. So I don't sell 5 rupees, 10 rupees call. So I'm an option strategist, but I don't sell open-mindedly for 10 rupees, 5 rupees. That is not my scenario. What I generally do is, I take a view, and then if the probability is there, I will also ensure that my risk and reward is always in favor to me. It doesn't mean that I am going to sell for 10 rupees and then keep the risk open. Even if the risk reward is 1:3, that means the reward I am going to get maybe 1000 rupees, if the risk is only 2000 rupees. Because as an option player, we know that we cannot play with the regular risk reward of, for a risk of 1 rupee, I can't get 5000 rupees. Okay, this is a general assumptions or general scenario one need to know about when it comes to option strategies. It is not only the probability, because probability is there when you sell a 2000 point away call. But if there is a sudden news that so Russia has stopped the war, then that means what will happen? Obviously the bulls will push through the market, and then whatever you sold it for, let it be 10 rupees or 20 rupees, though it is assuming that you had a probability of 99%, obviously you will be in trouble. And it is not only the probability for the option players, you just need to concentrate more on the risk and reward. And it is not only again the risk and reward, doesn't mean that I can take every risk of 10 rupees without any logic. So you just need to pile up your ideas and logics, because that's what we've been trying to do. Why I'm shorting the market, why, in what cases, in what logic I'm doing. So even if my view fails, how I'm going to consider my risk and reward. With all those things only, I'm trying to capture my view. So if you ask me now what is going to happen, right now the price is slightly bullish, but maybe for the today I may not take any positions. Most probably if I wanted to take, I need to take an bullish positions. But looking at the risk and reward perspective, so here taking a long might not be favorable for me, because if you take a long, obviously what you need to do, you need to at least go to the swing level to keep your stop loss. If you just consider what is the swing level in even 5 minutes, I'm just looking at the chart in the 5 minutes. So if I take long here, obviously my stop loss will be around for the Nifty around it will be 300 to 400 points. So what I could do is, if I wanted to be a bullish player, I would wait for a retracement so that my swing point and my entry point will be little closer, and then my risk and reward can be rewarding for me. So that is the way I generally trade. But looking at this today, because today is an expiry day, and moreover it's a monthly expiry and the yearly closing, I do not want to take a contra trade. But what my suggestion would be, like, I will wait till end of the day, and then I will actually initiate new positions for the next expiries. And you guys might be aware that we are sharing all the views, and I'm also personally sharing what I'm trading as a strategy, because I'm not giving the calls there, I'm just sharing what I'm trading. So you can have a look on my Telegram channel. It is our Zebu School Telegram channel. If you want to find that, please below the description you will have that as a link for that. Please be there to know the live market reports. Right now, if you ask me, so from here, bulls will be having higher end in terms of price momentum and in terms of data point of view. So what is the target you can keep is, so if you even consider the 15 minutes price structure, so it is approaching towards, Nifty is approaching towards its trend line target of 17,620 to 640. So that is a place where the higher time frame supply also is there. So I will be just waiting for that place in case if it is coming, and moreover if the next month data is favorable for me, at least risk reward wise it is favorable for me, I might be initiating a bearish positions. But don't think I'm a contra trader, because I'm saying for a 5-minute chart it is hitting the target. But if you look at from the weekly perspective or the daily perspective, from a broader perspective, obviously I am trying to capture the original trend in the longer time. But thing was, my stop loss would be very small at this case. So I am trying to preempt, but I am emptying in the direction of the longer trend. So please assume that I am not a contra trader. Please always try to understand what are all the logics I am trying to do. So for the Bank Nifty point of view, yes, it can go till 36,700 to 37,000. So that is the expected target if this bullishness or the data point of view is going to go. So maybe around the mid of the day or during the Europe opening time, so around 1 to 2, I am expecting that to reach, but I am not going to long here. Please note down, today my view is no trade. Actually, to be frank, no trade. If at all there is a dip, and please ensure that if the risk reward is there, then we can go about the longs. So short, please don't do it today, because today is an expiry, monthly expiry, weekly expiry, and moreover the financial year end closing. So there might be a huge buying from the institutional side. This is what yesterday also I said even in our Telegram channel. Today, like tomorrow was the monthly closing. Please be aware, NAV kind of manipulation may go. So that could be the reason why we have seen huge FII and DI figures in terms of buying. So right now, my expectation is around 2 to 3 o'clock I will see if this bullishness continues and it extends its target. Then as of here, I will just take a flag of bearish caution, and then I will try to build my position. So as of now, if you ask me, this is the view, and we will try to review at the end of the day. In case if somebody wants to have a regular view, please be a visitor of our Telegram channel. The link is already there. Hope you enjoyed watching this video. Thanks for watching.